Welcome back. This week we're going to talk about cryptocurrency, and I know going into this is your asterisk, this is your warning. I'm going to piss a lot of people off. Not intentionally, this is not clickbait. I just want you to know that the world as it pertains to cryptocurrency and banking is not as settled as it is on the internet and people's comfort level with cryptocurrency and trading in general. So strap on your seatbelts, let's go. It was a big week this week in cryptocurrency, but not for the average consumer. The Basel Committee that regulates and supervises banks came back and put all cryptocurrency, not just Bitcoin, not just Ethereum, but all cryptocurrency in the highest risk rated tier. Now that might sound weird and, kind of like a normal banking statement, but it has impacts. It has big impacts. What that essentially means is that 8% or a well-capitalized bank will have to have $1 in reserve for every dollar in loan they have against Bitcoin, which makes that a very risky and expensive proposition for most banks. It's a pretty significant setback, but not one that most consumers will understand. So why do you want a loan against Bitcoin or cryptocurrency? Well, if you sell cryptocurrency, it's taxable. And if you've been the benefactor of a very, very positive economy for cryptocurrency, even with the drop in things like Bitcoin and Doge, and you made a lot of money, if you sell that, you got to pay capital gains, assuming you're being honest and doing your taxes anyway. So a way to circumvent that by most people's accounts is to get a loan against that cryptocurrency and use that loan to make more money, eventually paying it back over time. A loan is not a taxable thing. So now the banking system's had a huge hit. The reasons why? There's been a lot of volatility in price. Cryptocurrency has a lot of anti-money laundering concerns. There's been some things like Shiba Inu and Binance that have had some investigations into them for things like anti-money laundering violations. And people are starting to get concerned about how these things are affecting economies. And yeah, I'm well aware that there are economies in South America that have adopted cryptocurrency as a form of currency in the state, but that is unlikely and improbable at best in the United States. And if you're a diehard crypto fan, don't get mad at me. Don't send me hate messages. Don't slide in the DM telling me that I'm dumb. I'm just telling you the statistical probability based on banking regulation. Don't make it personal. At the same time, we have things going on in Wyoming that have changed the landscape for two particular cryptocurrencies. Bitcoin and Ethereum have futures markets. And what does that mean? That means that as far as bankruptcy is concerned, you can actually liquidate and assign a value for those assets, which further stabilizes their longevity and their power in the economy. That means that these currencies are valid in the eyes of the judicial system based on some pretty interesting and forward-thinking law predicated by the state of Wyoming, and subsequently now states have followed. But it isn't all, gumdrops and lollipops. There isn't a big pot of beautiful bank regulation Bitcoin gold at the end of the rainbow. There's going to be some complications along the way, not the least of which is we're going to start to see some of these cryptocurrencies disappear. And the reason we're going to see them disappear is because there's not a lot of faith in them and there's not a lot of confidence. And while that's happening and there's this big reckoning of sorts in the crypto world, you have Ethereum and you have Bitcoin, which you think is a settled and understood thing. There's a futures market. There's laws around bankruptcy. But let me throw out a plausible situation that the world that I know of has yet to resolve. Let's say you have Bitcoin and you don't want to sell it because you don't want to pay those taxes. And you're a major holder. You want to get a loan against it. Well, now we know that banks can't just unilaterally give you a loan against it without having a massive reserve. So banks aren't going to be doing a whole lot of this lending. There are companies that will facilitate that type of lending by holding your assets vis-a-vis a trust company in cold storage access, and then they will subsequently give you a line of credit. But what happens if that trust company or that company that holds your assets in cold storage goes into bankruptcy? What happens to your money? We don't know. It hasn't happened yet. And if your assets are in cold storage, for those who happen to be laymen or laywomen for that matter, cold storage means that your codes to the collateral in the blockchain are held offline in an independent facility under what is usually the utmost security. So if you can't get access to it and they can't get access to it, there's a bankruptcy type situation, We're in uncharted waters. You don't want to be the guy who's got tens of millions of dollars in Bitcoin or cryptocurrency in a wallet somewhere and you got 2 password attempts left. Because guess what happens? You put in those 2 password attempts and poof, it's gone. So you take this thing very seriously. At the same time, there are people who are trying to resolve these matters when it comes to cryptocurrency and lending in the banking system. And one of the things people have been talking about recently is DeFi smart contracts. Basically, it's an algorithmic way of having an agreement. If I make a loan on your Bitcoin and this smart contract is triggered, that underlying collateral will be automatically transferred to me, the person who made you the loan, in a worst case event scenario of default, so I can liquidate those assets and I can get made whole. And as interesting as that sounds, it's still uncharted territory. So all this enthusiasm around banking, all this enthusiasm around the blockchain and around cryptocurrency and how these things can be used in life, I got some harsh news for you. It is not yet true currency. You can't get loans with it. You can't use it as collateral. Yeah, you might be able to go buy a Lambo, but it's not as malleable as cash. It's not as malleable as the dollar. And that's going to make a lot of people upset. I recognize that. But as we go through time, as you get some forward thinking and really creative law that goes around these things, as things start to go bad, you're going to start to see more and more comfort level with time. But as of right now, Basel made it pretty clear. They think this is one of the riskiest things you can loan on, and now they're requiring banks to hold a higher capital limit. So expect to see some changes as it relates to these banks that are coming out and talking about cryptocurrency. I still think it's a wonderful investment. I think it's got a bright future. I don't think all cryptocurrencies do. I think you got Bitcoin, I think you got Ethereum, and there might be some outliers out there who manage to survive. But there is a great reckoning coming. And those banks that have the confidence and the willingness to be on the cusp of that new frontier as far as regulation goes, and are smart enough and prudent enough to do it in a slow, steady, methodical way to build relationships over time, they're going to have a great, bright, and prosperous future. But it's not going to happen tomorrow. It's not going to happen next week. You need case law, you need litigation, you need things to go bad, and for people to look at it and make a determination before it gets better. So for those of you out there in the cryptocurrency world, hold tight, put your big boy pants on, get the seatbelt on in the car, and get ready for a bumpy ride. You're going to see some value fluctuations. You're going to see things change. And maybe in a couple of years, we're back to prosperous times again. That's it for this week. I appreciate you tuning in. Be smart, be cautious. Hopefully we provided you some value. Make sure to click and follow, like, subscribe. We need more people out there like you interested in what we're doing because we're trying to provide value.